Hey, welcome back to the channel, Fully Invested Fi. Today felt like it would be good to do a little midweek check-in given just the downturn we've had over the last few weeks and last month really. And yeah, just see what I'm doing with that and how I'm handling it. And then also I wanted to talk about the YieldMax reverse split that was announced last week, and that's happening on December 1st. Seems like it affected like about 12 holdings or whatnot, if I recall correctly. And yeah, so I'm affected here because I have ULTY. So we'll talk through that and why there's no reason to panic, I think, and why that's kind of expected given their strategy. So yeah, and before we get started, I'll just have to give a quick disclaimer about everything. This is always here on text, but I want to mention it outright. So yeah, this video is for entertainment and educational purposes only. I'm not a financial advisor. Nothing here should be taken as financial advice, investment advice, or tax advice. All I'm doing is simply sharing my personal investing journey and documenting my own results. So yeah, investing always carries risk, especially when you're using margin like I am, and it may result in the loss of principal. So please do your own research before making any investment decisions. No returns are guaranteed. So yeah, before we get started, I'm not going to go over this chart as usual, actually. I want to change up the format for this, and let me know what you think, if you'd rather I keep going over this every video, or if what I do now works better. So yeah, this is the chart where it shows the monthly flow of like how I live out of my Robinhood brokerage account and pay bills on margin, and also invest 100% of my paycheck. I invest basically 100% of my paycheck in both growth for capital appreciation and then high yield ETFs for income. So I don't use a traditional bank account anymore. I never sell any of my assets to pull out money out of the account. What I do is I fully live out of and pay bills out of my brokerage account with margin. That is margin against the full market value of the account. So if you want an in-depth breakdown of this, you can watch the video at the link up the top right here. So yeah, again, let me know what you think of this, if you'd rather that, or if I should just go over this every video. So yeah, let's get started. So yeah, so this last month's downturn has definitely been brutal, especially when you're in margin. So yeah, I've definitely been seeing a lot of videos on YouTube these last couple of weeks as far as other YouTubers selling out of big positions that they had and things like ULTY, WPay, or selling out of their portfolios entirely and kind of rethinking things. And yeah, of course, the downturn has been like pretty scary, especially when you look like, yeah, for like on the week, I'm down a lot because this is amplified a lot because I'm on margin. So I'm down like 7.27% on the week, down 11% on the month, which is a lot. Like I've basically, the bonus I invested the other week is basically gone. So yeah, 3 months, I'm down 5%. And now year to date, I'm actually negative for the first time. So yeah, all the gains from the year are basically gone in the last month and a bit now. So yeah, definitely not for the faint of heart, and that's why I warn against the dangers of margin. This works both ways, right? So on weeks it's green, it's nice, but on the last couple of weeks you'll see how that can kind of really hit. So definitely not for the faint of heart, and not for everybody. But yeah, despite all that, yeah, I'm not selling a thing. So this is like the first time I'm actually in the red since Liberation Day, actually. So we pop over to my spreadsheet here. So all the way down here, I track like where my portfolio has been over the last, ever since I started investing, really back in like early 2021, early 2022. But yeah, I started my spreadsheet kind of late. Yeah, you can kind of see here, this was Liberation Day, and yeah, how it's gone up. And here, why this is higher despite this going down is that like I started factoring in total returns in that. So that wasn't being factored in before. But yeah, you can kind of see the difference there. So yeah, if we go to my total return, so my total return is still positive if you factor in all the dividends that have come in, but you can kind of see here for unrealized gains, I've dipped into the negative for the first time since Liberation Day. So I'm down 3.75% on the full portfolio, or 10.7K, or 7.7% if you factor in the margin. So yeah, it's definitely a lot of red for the last few weeks. But yeah, again, I'm not selling a thing, and because yeah, how I've built my portfolio, I've been happy with like all the different things that I've built up in there, and they're doing kind of precisely what I need them to be doing. And honestly, I'm more excited to keep buying things at a lower price than anything else, right? So like honestly, I can't wait for paycheck next week, so I can kind of just buy these lows. We'll see. Hopefully, maybe there's an upswing, but we'll see. It could also just keep going lower until next week. This week, I don't think I'll take the approach where I'm going to do like the last one where I'm going to transfer stuff over and invest early. But yeah, it's a funny thing with the stock market, because it's like really like we love sales in generals, you know, as far as like just normal stuff that we buy. But the stock market is the one place where when it goes on sale, it actually scares people out of it and causes them not to buy generally. So yeah, ideally, I think it should always excite you to keep buying, really. But granted, really, it's something that you need to develop a stomach for, as I've mentioned in the other video. Like I went through that in 2022 with the tech downturn, and that really tested me. So I don't want to make the same mistake now. Like I didn't necessarily sell out of the whole market, but I kind of rebalanced things. But also, like I think that highlights the fact that like it's important for everyone to find a strategy, no matter what it is, whether it's high yield income, whether it's growth, whether it's combo of the two like I'm doing, and whether you're using margin or not. I think it's important to find a strategy that you like, and then that keeps you invested in the market and also investing through the highs and the lows, no matter what's happening. So personally, I think I've really found that with my strategy, despite the volatility. So yeah, that's where I'm at with this downturn. It's not scaring me out. I'm still invested, and you can kind of see that all my positions are still there. I haven't trimmed. I haven't gone out of anything. If anything, like I might maybe diversify into maybe some like more safer yielding stuff. Potentially like next week, I'm looking at maybe getting into SPY-I, QQI, or maybe T-SPY or TDAC. Yeah, just to help bounce it out from like the very high yield stuff that I have between like ULTY, YieldMax, and WPay. So yeah, just a bit more balance there. So I don't want to necessarily sell out of one to go into the other. It's just kind of adding more to it in different ways, right? And diversifying a bit better. So, but yeah, I think like overall though, it's in downturns like these that it's important to highlight what's important, right? So like, I think it's important to like understand the funds that you're invested in, how they'll react. So like, for example, like I know like everyone's been hating on ULTY lately, but for some reason I've just been reading a lot of people that like were somehow expecting growth from ULTY when investing in it, and keep thinking that like there's some people are still holding out hope that YieldMax can fix its NAV erosion issues and whatnot. But if you kind of like read about the strategy, its inherent strategy is to harvest premium from high volatility names, right? And give you the most yield. So that will inherently always give NAV erosion. And when it's dipping, people panic sell at a loss instead of collecting the income. And yeah, it's like hindsight's 2020, but its stability during post-Liberation Day was really from the upswing and like the big V-shaped recovery, right? And I guess people were thinking that might last forever given the prospectus change and all that. But yeah, best case scenario we saw is that like, yeah, you're not really going to get growth from ULTY. Like at best, you'll kind of get like a tight channel swing essentially to kind of keep relatively stable. But yeah, it's either that or it's going to keep going down, right? So yeah. And also, yeah, another point is to like not be overly invested in only one fund, especially in the high yield space. I think that's a different case for like if you're doing like a diversified ETF and like VU, QQQ, and things like that. You could just have a portfolio of that really. But for in the high yield space specifically, like I've seen people go very heavy into ULTY or WPay, where like they have hundreds of thousands of dollars or maybe even their full portfolio. And they tend to panic when it starts going down because they're really not diversified into other stuff, right? So personally, I have a lot into ULTY, but also I have a lot into WPay, and then also have a lot into XPay, which is like a big anchor in my high yield thing. So that one's actually kind of stayed like relatively NAV stable through the ups and downs. Yeah, so like if we kind of look through, right? So have a diversity of stuff here, right? So XPay is kind of providing a bit more stability here, and this is still green on unrealized gains. WPay obviously has gone down a lot given the upswing and the leverage. Yeah, YieldMax has gone down, but it's still green total return given the inherent diversity between all the funds it's holding. ULTY has stayed red, and yeah, and then the single stock stuff is a bit different there. But yeah, it's also important to highlight that I'm not big into like any one of these. It's kind of spread amongst all of these in different ways, right? Maybe a little bit more than I'd like in like stuff like NVIDIA and stuff like that, but we'll see how I rebalance that or not. So yeah, and then really like, and also I think it also highlights the third thing where it's like not to be invested fully in one type of asset personally. For example, just being 100% into high yield ETFs. So like personally, I'm like really happy to be diversified across high yield ETFs, across growth, across dividend growth. So yeah, no single thing will kind of take me down, right? So like, yeah, like a big anchor in my portfolio is actually SCHD, which is like totally uncorrelated to most of what my portfolio is in. So like I have, yeah, over 40K in SCHD, right? Out of the 276K that I have. And yeah, that provides me comfort, honestly, because like this one has been holding up a little bit better compared to everything else, like over the last month, right? So given that it's uncorrelated to tech. So yeah, it's I think that just highlights that too. You shouldn't be necessarily I shouldn't say shouldn't. It's different for every person. For me personally, I like being a bit more diversified there and not just not being all in one asset class and that scaring me once any dips hit, right? So yeah, at the end of the day, like I mentioned, I think everyone kind of needs to find their own strategy and setup that they like, that just keeps you invested and keeps you invested through the highs and lows no matter what's happening. So yeah, I think I found that with my strategy. And yeah, there's no best strategy, and anyone that says that is like there's an end all be all. There's not. It's everyone's personal risk tolerance is different. Everyone's thoughts on different asset classes are different. So it's, yeah, you have to do your own research with that kind of stuff and feel out where your stomach's at and appetite for risk is, right? Yeah, and then as far as the YieldMax reverse split, so there was that big announcement, or they kind of slipped through with a SEC filing. So yeah, they're hitting like 12 different holdings, and really like the only one that's affected for me is ULTY. So because this one is getting near under the $4 range and kind of heading towards $1. So ULTY is going through a 10-to-1 split essentially, right? And yeah, so for a normal stock, I think a reverse split might be bad, because that means like the company's performing badly, like their finances are not doing good. But for a covered call ETF, it's kind of different, right? Because it's not necessarily a company. It's basically just you're tracking an underlying, and yeah, you have a downside exposure, but also a capped upside. So as long as the underlying doesn't go to zero, the ETF won't disappear. So yeah, so you have to be careful, and you have to be bullish on the company that you're invested in. If you're doing like single stock ones, or if you're doing a basket of stocks, kind of need to get a general idea of what's in there. But yeah, as long as the company doesn't go to zero, the ETF won't go to zero. And I guess a reason through that is also through doing the reverse splits, right? Because yeah, with that they can keep reverse splitting technically to avoid any regulatory issues as far as reaching too low of a stock price and risk getting delisted, right? So yeah, I know YieldMax said in the past that they wanted to avoid it if possible for the reverse splits, but really that was more of a marketing and sentiment issue given the backlash that they faced back when Tesla got its first reverse split. So yeah, but again, I guess this got too low for comfort, getting close to $1 and like potential delisting. So, and then also like I was reading that it might cause issues for margin or margin maintenance in certain brokerages and whatnot. So, and I'm sure they know a lot of people use this on margin. So yeah, this is my first reverse split with YieldMax, but in theory, it really shouldn't change anything. So your slice of the pie, you got to think of your stock or your overall value of something as like a pie, right? So right now my ULTY pie is split into 3,553 pieces, right? A lot. So this 14K that I have in there is split into that. So what's happening is with a reverse split is that instead that same value is basically going to be split up into different ways. So in this case, it'll be split up in larger pieces or times 10 larger pieces, or divided by 10 larger pieces, right? So yeah, so really your capital stays the same. So this number stays the same. They're not taking away money. They're not doing anything like that. But your share count will diminish by 10x. The dividend will increase by 10x, but functionally it's still the same number. So if you were getting paid, say last week I got paid like $220 in ULTY, and assuming the payout is still the same, also be $220 after the split too. So yeah, we can kind of see how this will look like in the spreadsheet here by just kind of calculating that 10x and 10 divides and all that. So for ULTY, for example, so really what's going to happen is that, so my share count here will basically divide by 10. And so I'll have 355 shares instead. The share price here is going to multiply by 10. So here you'll see that the number went down, but also like the share price will basically kind of go by 10. So you'll see the number is back there. So like that, so we're good. And then the last thing is that the dividend also would come up. See, so here these numbers, they're not adjusted because I haven't adjusted the dividend. So the dividend would basically multiply by 10. So yeah, functionally, I'll be getting the same numbers, right? So if I backtrack here, so my dividend before was 1462, and then I'll just redo everything, and yeah, you can kind of see it's 1462 still. So really, that's what's happened. It's really just kind of like separating the pie in a different way. So technically it's not taking away any money. It's not taking away any of your dividends. It's really just kind of adjusting the price upwards, just so there's more room to, like, when there is NAV erosion, it can kind of go down, has more room to go down, right? So yeah, personally, I'm not freaked out by the reverse split. It'll be my first time going through it, so I'll keep you updated on how I feel about that. But yeah, in theory, it shouldn't change anything. So yeah, as long as they keep it, their strategy is still the same. They're still investing in like high volatility names to harvest premium. And yeah, they're just kind of keeping that high yield, right? So they've been getting anywhere between 70 and 80% yield, which is a lot. So that's still the strategy, really. And a reverse split doesn't change that. So yeah, its payouts have definitely been getting a little bit. I'm just gonna back out of all of this because that's not the price anymore. But yeah, their payouts have been getting a little bit lower the last couple of weeks. I've noticed it's definitely gone down from like the 9-10 range and it's kind of getting to the 7-6 cents. So yeah, we'll see how that holds up. I think like probably that's part of that is due as well to just the craziness that's happened over the last month or so. So we'll see how things recover or not. But keeping an eye on it. And yeah, so that's the reverse split stuff. Personally, not freaked out, and we'll see how it reacts because yeah, it's my first time going through it. But yeah, I don't expect the payout to materially change. It's really just just an accounting backend thing, really, more than anything. So yeah, that's the video. So just want to go over that, given all the downturn scares and whatnot. So yeah, just want to tell you where I'm at and kind of stuff to look out for. So yeah, as usual, I'll have, or not as usual, these last 3 weeks have been a bit sporadic with the updates, but my next video will be on Saturday where I can kind of catch you up on the portfolio from the last 3 weeks, really, since the last October update. So dividends, performance, and yeah, just talking through all of that and any portfolio thoughts. And yeah, and as usual, you can follow me off YouTube in a bunch of different places. I'm on Blossom Social here, where you'll kind of see like my portfolio and see like percentages and my trades as they come in. So like this week, for example, I had my YouTube earnings come in, and then also some Snowball Analytics referral money come in. So I've invested that in GOW. So yeah, you can kind of see here that my earnings related to YouTube have gone up a little over 1.1K now, which is nice. Yeah, you can kind of see that on Blossom. You can also see that through my free Snowball Analytics portfolio, which has all my numbers, everything transparently, all my total profits. You can kind of see what's in the green, what's in the red. Yeah, obviously a lot of the high yield stuff is in the red, even with total return, given the downturn these last few weeks. You can kind of see that. And Costco is still in the red. Might maybe be putting more into that in the future. But yeah, you can kind of see all those numbers transparently, and also Patreon as well. So a lot of different ways you can kind of follow me off YouTube. So my Patreon is completely free. All the videos that I post on YouTube, I post on Patreon in the same time. So this is just a good backup in case there's more YouTube shenanigans, right? So completely free, all the same videos, since you can see it on YouTube. And there's also a little membership option, just as far as if you want to support the channel. You just get some little extra perks as far as extra private Discord channels, and early beta access to my spreadsheets eventually. And that's just more for early access and to get your feedback before I put it out, because I'll be putting those out for free as well too. So yeah, so it's really just more if you want to support the channel there. Nothing too crazy there. And then also there's the Discord server you can follow along to. Like all the links for these are going to be in the video description below. So yeah, great little community of people here. Yeah, just been great to talk to people in between videos, and then also just discuss stuff and talk about the market craziness with Robinhood and prediction markets with the weather. Yeah, a lot of good conversations there, and video sharing of other channels and things like that. I post all my trade alerts on here as well, so you can kind of see my GOW buys from earlier this week. So yeah, a lot of ways you can follow me, and I hope to see you there. And yeah, as usual, if you get a lot of value from this, just please like and subscribe either on this campaign channel, Fully Invested Fi Labs, or on the main channel, Fully Invested Fi, which, as mentioned, I'll be posting on again at the end of January next year. So, but for now, you can catch all my new videos on this channel. So look forward to seeing you in the next one. Peace.